Hello, it's
Where's fair
Mr.
value at the moment
Intermarket
and just how much
Analysis
higher
bringing
are
you
you
a
talking?
review of the
Well,
FTSE 100 for Friday's trading, the last trading week or trading day of the week, should I say. Okay, so interesting times. Okay, so where exactly are we? Are we right now on the FTSE 100? Now it looks like this market keeps getting a carny spook. Okay. Each time Mr. Carney comes on board and starts to talk about forward guidance or the economy, etc., he certainly triggers off a sell-off. So today he was anti-FLS, the funding for lending scheme. He came out and he talked it down, and he's certainly going to be changing direction with regards to it as well. So interesting. Okay, that's obviously kicked off a sterling rally. Okay, and technically should cause an equity market sell-off. Bank of England cuts mortgage support to avoid housing bubble. Okay, he certainly looks like a confused chap to me, to be honest. I mean, he's certainly talking sterling. I'm not sure if he does it intentionally, but he's certainly sent sterling higher, and that itself, or in and of itself, is obviously hurting the FTSE, and that's why the FTSE is lagging right now. Compared to global markets, you've got Nasdaq new highs, S&P almost knocking on the door of new highs. You have the Dow making new highs, you've got the DAX making new highs, you've got CAC pushing higher today, you've got the Euro stocks pushing higher today, yet the FTSE lagging. Why? Because of this chap here. Even his photo there looks a bit confusing days from my perspective. I don't think he's all made out to be what a lot of people expected anyway, but the fact that he was trying to cool the housing bubble obviously is a good sign. Okay, the Bank of England moved to head off the risk of a housing bubble in Britain on Thursday, making a surprise announcement that it would put the brakes on a scheme launched last year to help boost mortgage lending. Okay, the central bank said the funding for lending scheme would cease to offer banks incentives for mortgage lending and instead be focused on helping small firms to borrow. The news caused shares in house building firms to tumble. Okay, so that's obviously going to cause a ripple on the FTSE. Okay, um, obviously that's negative for growth because the average individual isn't buying a house, he's not buying new goods and services, was probably not buying furniture, painting and decorating, and so on and so forth. So certainly going to hit the housing stock or housing shares. Okay, so keep an eye on that, folks. Okay, so that's certainly negative for the FTSE going forward. Okay, so where are we on the FTSE technically speaking, given the fact that Mr. Carney is sending sterling higher, and obviously sterling making new highs, which isn't obviously good for British exports, okay, or UK exports. So FTSE 250 is into resistance. You've got horizontal resistance here, a topping tail. Okay, so you've got a topping tail, so we can just take the pivot high here with a slide down here. Obviously we've had a topping tail at 75%. That equals bearish, and expect this rising contracting wedge to be broken to the downside. Okay, given the fact that sterling's moving higher and obviously hurting exports. Right, so let's have a look at the FTSE chart now. Okay, so what do we have here? We have a bear flag formation, so bearish continuation pattern here, falling. Obviously we're still in this falling expanding wedge pattern, bearish continuation pattern. So red candle consolidation, red candle consolidation, boom, down we go. Okay, so you're looking at probably 200 MA on the downside, 6500 level, 6530 level, probably lower, especially given the fact that German unemployment data was higher than expected today, and German CPI, or was it German CPI? Was it? Yes, German CPI data was higher than expected as well. So that obviously means higher interest rates for the ECB, which means equals a higher euro, which obviously hurts the export sector. So add all that together, it's not looking good for the FTSE, nor is it looking good for the DAX. Okay, so if the DAX is going to fall, what do you think will happen to the FTSE? It goes down. Okay, so remember, they move in tandem. Okay, so let's have a look at the FTSE chart now in a micro time frame. So let's see what this chap is doing. Let's just bring this across over here from multiple screens. Okay, so 60-minute chart. So as you all know, I was forecasting the inverted head and shoulders pattern. We failed. Okay, we had a micro inverted head and shoulders, as you can see here, left shoulder, head, and then obviously we were supposed to put this right shoulder in and propel higher, which we failed to do. Okay, so again that's bearish. So we failed the small inverted head and shoulders pattern. We had a symmetrical wedge. We broke out the symmetrical wedge, as you can see here. This is wedge, we broke out to the downside. A failed inverted head and shoulders pattern equals what in emotive sell-off? Exactly what we got. Okay, and we've failed to hold 75% for the right shoulder on the inverted head and shoulders pattern. So that pattern has now been negated, so I can get rid of that now, so that you know. Okay, so I'll get rid of this, get rid of this, get rid of this. This pattern has failed to play out. Obviously, we've moved below 75% on the Fibonacci retracement. Now, based on obviously several statisticians' work, statisticians or statistics, oh, I can't even say the word. It's that late. It's 2 o'clock in the morning. I'm making this video. Okay, so based on the stats, basically we have a failed pattern, so therefore I expect this double bottom to be tagged, which is 6610, and obviously go lower as well, given the fact that sterling's had a stellar rally. Okay, so we're holding this resistance line here. You've got a bearish engulfing candle, you've got a bear flag formation, so certainly looking to test 6630, if not 6610 tomorrow. Okay, now obviously I'm short overnight, so obviously I've got an inherent bias, but that's basically what I'm seeing right now. Okay, 10-minute chart, obviously you can see here on the FTSE you've got a HNS formation. So HNS formation target is, if we look at this here, the head is at 6680. We've got a neckline which is at 6650. Let's call it. Okay, so let's look at, you're looking at 6620. So again 6610, 6620. Again looking at this double bottom here at 6630. Probably would pace and go lower than that, to be honest. But we'll see. Okay, so market dictates. We can't dictate to the market. All we can do is look at the best setups and trade accordingly. Okay, so looking at your other variables, obviously Aussie and Kiwi are getting smoked, which is negative. The oil chart as well, given the fact that the life supply or the lifeblood of the FTSE is oil, and there's a very negative pattern on oil now. I did have a bullish setup on oil, and I did explain to you that it requires a bullish catalyst. So given the fact that we never got a catalyst, given the fact that Iran was given the fact the Iranians came to the table and started to agree to a settlement, etc., etc., this inverted head and shoulders failed to play out. Okay, so remember, that's not a catalyst. A catalyst is if the Iranians didn't come to the table, then obviously that would have been a catalyst, and that would have propelled oil higher. Okay, and that obviously didn't. We had a failed right shoulder, and generally speaking, in a technical analysis, when you have a failed pattern, what happens? You have an emotive move in the opposite direction. So certainly with regards to oil, expect this level here around the 90 level to get touched. Okay, if not 85. Okay, either or, but there's definitely no growth out there, especially the German unemployment rate coming out highest since 2001 or 2011, should I say? And obviously you've got higher CPI data as well, which is not good. So and given the fact that the Kiwi and the Aussie are getting smoked, okay, so it's certainly not looking good. And what do you have here? You have a death cross. So when the 50 MA goes below the 200 MA, generally signals an impending disaster or an impending sell-off on the chart of oil. So hopefully once the Yanks come back from there, the turkeys, okay, and start belching, the market should start to move. Okay, so basically that's what we're looking at there. Okay, so I think I'll call that a wrap. So always remember, risk on, risk off, wax on.